Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. You want to buy real estate, don't you? But you need the money to do it. Today, we're going to talk about real estate lending on non-owner occupied homes and other properties. And we've got an amazing guest today on the Real Estate Guys radio program. Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2018 Goals Retreat, January 5th to 7th in beautiful Lake Las Vegas, Nevada. This unique weekend event has been called phenomenal, inspirational, and life-changing by the hundreds of people that have attended. Find out more at realestateguysradio.com and click events or call 888-489-7723, extension 18. Get your life back on track physically, spiritually, and financially. Attend the 2018 Goals Retreat on the first weekend of the new year. Click events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723, extension 18 today. Memphis is famous for being the home of the king of rock and roll, but it's also the king of cash flow. If you're looking for affordable cash flow properties, it's hard to beat Memphis. Get your portfolio rocking and more cash flowing your way by calling Terry Kerr at Mid-South Home Buyers. Terry's the king of turnkey properties. Contact Terry through the resource section at realestateguysradio.com. And be sure to order Terry's tips for turnkey rental property investing report. It's free. Just send your request to turnkey@realestateguysradio.com. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. With me, as usual, co-host, financial strategist Russell Gray.
Hey, Robert.
You know, when you buy real estate, you get two things. You get the real estate and you get the income. And today, what we're going to talk about is how can you make that happen without having all of your own money. One of the things we love the most about the vehicle of real estate as an investment is leverage.
Yeah, absolutely. I mean, I come out of the mortgage business, and when I got into the mortgage business, the reason I did it wasn't because I wanted to be in the business. It was because I wanted to invest, and I felt like the key to doing real estate was understanding financing, funding. And so I said the best way to learn it is to get into the business and be backstage. Well, you know, there's a lot of different aspects to lending. And so I just said, well, I'm just going to pick something basic. And I went into mortgage brokerage, brokering single family and 2, 3, 4 unit properties. And we were brokering what you'd call, you know, conventional money.
Yep.
So we would go out there and we'd find people that had pools of money and they were mortgage banks, and we would broker to them. And then they would do a whole bunch of things behind the scenes that in the beginning, when I was in the business, I didn't even understand. So they would package it up and then, you know, they would create mortgage-backed securities and sell it in Wall Street. And so the flow of where the money actually came from to get all the way down to Main Street where I placed it, I didn't really understand in the beginning. The more time I spent in the business, I kept working up the food chain to understand the motivation of all the players and how it worked. So that's one side of it. Because that money was going to get sold in the secondary market, the backstop in that market was Fannie and Freddie. And so you had to write loans that conformed to their guidelines in order to make sure that you were backstopped. And in other words, if you couldn't sell the paper on a private market, you knew Fannie and Freddie would take it. And so,
all right, so no investor left behind. Here's what that means. Most lenders don't have their own money that they lend you for 30 years. Instead, the entire industry is based around the fact that there are investors, not an investor like you listening who wants to buy a property, an investor who's going to put capital to work in a mortgage instrument. It might be a big hedge fund, it might be an insurance company, it might be, who knows, big company, and there's private individuals that do this. And the idea is a lot of the mortgage brokers especially, they'll come in and they'll have a source of capital. They will underwrite your loan and you and the property, and you're the borrower and the income and all that. And if it fits those boxes that you were talking about when it comes to a loan that is a conforming loan, it conforms to some guidelines. If all those things are true, as soon as that loan gets placed and funded, meaning you have the money, or actually at that point the seller will have the money, you have the loan, you're making the payments. Now that lender goes back and sells that asset to one of these groups or a fund or Fannie or Freddie or somewhere and gets the money back to lend again. So a lender, like what you did, Russ, is you operated on churning the money.
Yeah, so there's a lot of people in the food chain, and I was at the lowest level of the food chain. I was a mortgage broker, which meant that I never lent my own money. What I did was I just found people who had money that they were offering to lend through the brokerage channel. They would tell us what their underwriting guidelines were. We would do a quick pre-qualification with the borrower, credit score, debt-to-income ratios, cash reserves, and if the numbers made sense and the collateral made sense, we could write the loan, and we'd submit it to their underwriting department, and their underwriting department would double check all our work and go, yes, this loan qualifies, and they'd fund. We would get paid a commission for doing the loan, and we get some fees, maybe, processing fees or whatever. And that was our business model. The next level up were people that were direct lenders. And so what they had is warehouse lines of credit. They weren't lending their own money, but they had access to credit lines. And so they would underwrite, and sometimes they had direct underwriting authority from the people they were ultimately going to send the loan to. And they would originate the loan, and then they would fund out of their own money, and then they would package the loans up and sell them to somebody that was going to hold them for a period of time. And then they became chips in the Wall Street casinos where people would flip them to other people. And, it's kind of all boring what all goes on behind. But there's a lot of people in the food chain that are interested in feeding at the trough. The person at the retail level, at the origination level, the loan officer level, the people that you work with when you go to do a property, they are manufacturing paper, if you will, for the people who want to hold that paper and derive a stream of income or trade the paper in the paper markets as gambling chips, if you will. So that's kind of all what's going on behind the scenes. Now, the conforming money was always backstopped by government, and so it was cheaper because it was less risky. So they always had a competitive advantage. And a lot of what happened is the people who were in the lending business, in order to compete, had to go out to the margin. And so things like alt A paper was born, which is an area we operated in, or subprime lending was born, because you couldn't compete really in the main fat spot, or if you did loans that were above the loan guidelines, non-conforming, jumbo loans. So there was a lot of different places. Then you get private money, hard money we've talked about, where a private lender, an individual lender with a bunch of money that they wanted to put to work would go find a local broker who would go find a local property and make a hard money loan, because that loan wasn't financeable. So it wasn't just the borrower that had to qualify for the loan, but the property had to qualify for the loan. And the challenge is when you're out there as a value-add investor, and you're looking for these properties they're in bad shape, and you've got an opportunity to fix them up. The problem is you can't go get funding to do that from a conventional source, because they're not interested in what you're going to do. They're only interested in what's going on right now, and that property's pretty darn ugly. And so we can't get out of it if you don't perform.
Lenders are interested in two things. How are you going to pay them back? And what happens if you don't? So the how are you going to pay them back part is, does the property make sense? Do you make sense as a borrower? What's your credit score? What's your income? All of that, so that the lender feels like you have a better than average chance of making the cut and be able to make that payment. Though what happens if you don't is, we have to be prepared to take the property back, and that's the collateral. So to your point, if the property is not looking good today,
it's got to be immediately marketable.
Right.
If it's not, they don't want it.
If it's not, the traditional sources don't
exactly.
want it. But it doesn't mean you can't get loans on those properties. In fact, the gentleman you're going to meet today makes exactly those kind of loans, and lots of different kinds of loans, which is why you're going to learn a ton today. And we're going to find out what is the current state of the mortgage market, because I knew you did it for a lot of years, Russ, but you've been out of the business almost a decade.
Don't miss it. Well, I kind of do. I mean, it was fun, but I'm happy with what we're doing today.
Well, if you're wondering what's happening in the world of finance and how even you can get a loan, stay tuned. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com. Worldwide demand is making coconuts one of the highest yielding cash crops available today. Coca-Cola, Pepsi, and many high net worth individuals have invested billions of dollars into coconuts for strong growth and solid long-term income. Yields could be as high as 18% or more per year. Capital appreciation and exceptional income for up to 60 long years could be an absolutely brilliant investment to pass on to future generations. For more information, qualified accredited investors should email coconuts@realestateguysradio.com. Diversify wisely with direct ownership of fully managed coconuts on prime farmland close to the beautiful Costa Rican border. Email coconuts@realestateguysradio.com. This announcement does not constitute either an offer to sell securities or a solicitation of an offer to purchase. Offering made by prospectus only. For more information, email coconuts@realestateguysradio.com.
The Real Estate Guys are throwing a party and you're invited. Join Russ and I at the New Orleans Investment Conference, October 25th through 28th. Now in its 43rd year, it's the nation's longest running investment conference and features some of the biggest names in economics and investing, including Robert Kiyosaki, Chris Martenson, Peter Schiff, and many, many more. The Real Estate Guys are speaking in 3 different sessions and attending lots of others, and we're hosting a hospitality suite one of the evenings for our friends and listeners, including some VIPs for you to mingle with. So make plans today to join the Real Estate Guys at the New Orleans Investment Conference. With everything going on in the world, no serious investor can afford to miss it. Send an email to neworleansparty@realestateguysradio.com and we'll get you all the details. That's neworleansparty@realestateguysradio.com, and we'll see you in New Orleans.
Hi, this is Patrick Donahoe, CEO of Paradigm Life. Wall Street and banks spend billions of dollars per year in advertising with the goal to convince you that they are the solution. But take a look around. None of their advice has worked. If you're listening to this, odds are pretty good that you're already a real estate investor, or at least becoming one. So why do you do it? Is it to hedge inflation, the tax benefits, or maybe it's to get your money away from Wall Street? It's because of these benefits and so many more that I created the Real Estate Investor's Guide to the Perpetual Wealth Strategy. When you combine successful real estate investing with the Perpetual Wealth Strategy, you have the recipe for what has helped the wealthy to establish their financial well-being for decades. You can download the Real Estate Investor's Guide to the Perpetual Wealth Strategy today by clicking the Resources tab on the Real Estate Guys Radio homepage. Don't wait, go download it now.
Hello, Robert Kiyosaki. Listen to the Real Estate Guys. They're wild and crazy, but they really know what they're talking about.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station all the time at realestateguysradio.com. You've picked a good show because we're talking about one of our favorite things, leverage. In order to buy a property, you get to put up some of the money and the lender gets to put up the rest. Let's meet a gentleman who knows a lot about that. He started out in the hedge fund business before there were even hedge funds, and today specializes in financing property, not for homeowners, but for real estate investors. Let's say hello to Tony O'Brien. How are you?
Good evening. Thank you for having me.
Absolutely. Pleasure to have you on the show. And you've been in the world of money a long time. Tell the listeners a little bit about your background, Tony.
Well, I came out of Michigan State and went to work for Bache Halsey Stewart Shields. I was a stockbroker in money. I ran the institutional desk out of the Midwest, went to the rate senior vice president, decided that I could do it better than a big firm could do, so I went out and started a company called Spinnaker Partners and started a hedge fund in 1985.
Well, and back then, a hedge fund looked totally different than it does today.
Yeah, we never even called them hedge funds in those days. We called them money managers in those days. And we got in the business, moved to San Francisco, raised $1 billion, managed it until the year 2000, and sold the fund.
Wow, back when $1 billion was a lot.
Back when $1 billion was really $1 billion. That's
Wow.
correct.
And now today, what you do is help investors who are looking to buy properties to finance that. So before we talk about specifically the loans and things, I know you keep your thumb on the pulse of the big picture of lending. And lending has changed a ton since the big market meltdown and underwriting standards and Fannie and Freddie going from being GSEs, government-sponsored entities, to actually being the government, and all loans being FHA. All that has changed. Give us kind of a state of the union. Where is lending today?
Lending today has taken a number of interesting twists. For the individual investor, they're all good.
Yeah.
The reason being as follows. Number one, the government's gone, the big banks are gone. They're not interested in the small investor buying a property, as you discussed earlier, having to rehab it, and then either flipping it or turning it into a rental and selling it as a rental property. There's no bank interested in that kind of play any longer.
Right.
That's how the private market came into play right after 2008, when there was no money and some hedge funds got together and said, why don't we start lending money in these fields? And so you started seeing companies like Colony Financial, Blackstone, BlackRock, some of the bigger funds started coming in and lending capital. And then the smaller guys figured out they can be more efficient, companies like my company, And we figured out how to do it in a quicker, more efficient way. And we've seen the market turn into from a cottage industry to a full-blown industry unto itself, the private money markets.
Absolutely. You know, one of the interesting things, I think, is so many lenders focus on the person who buys a home to live in it, and that's great. Same thing with realtors, by the way. They focus on selling houses to people that live in them. But we play in a different world, right? When we're investors, we don't want to just own one house. You know, Jim Rohn said you should have a bicycle to ride and a bicycle to rent. Same thing when it comes to houses. We want to own multiple properties, but that doesn't necessarily translate to what Russ was talking about, fitting in the guidelines. The investor that wants to own a dozen properties or 24 properties isn't exactly the perfect client to most lenders.
That's correct. So we have what we call Dodd-Frank, which has been the new governing agency since 2008. So we talk about inside and outside Dodd-Frank. So I operate, and most private lenders operate outside Dodd-Frank. So we are pretty much what the market will bear kind of lenders.
Yep.
Rates started at 15% back in the day and slowly matriculated down. And today you see rates as low as 8%.
Yeah.
So it's a market-bearing industry, which is the way it ought to be. That's capitalism in its finest form. We've gone from 50% loan to cost to as high as 90% loan to cost. I know some lenders that'll lend 100% on a property as long as you own a property that you live on.
Wow.
So there's great play. And for the investor, it's phenomenal because there's far better opportunity than there ever has been.
Well, and this is one of the areas that I think there's a lot of misinformation on. When you hear private money, you think, oh my gosh, high points, high fees, high interest rates, some guy with a loud jacket and tie. But in fact, it's one of the best tools there is in real estate because it's nimble, it's quick. The person you're dealing with is usually the decision maker or close to it. So we're big believers in that for the right deal. So specifically, what are the kinds of deals that make sense for this kind of money?
As a lender, what we look for, first of all, is we look for the integrity of the individual. Do they know what they're doing? Are they trustworthy? Because no-doc loans, which is a famous comment at a lot of lenders, there's really no such thing as a no-doc loan.
Right.
We need something. We're going to ask for a driver's license. We're going to ask for some bank statements. We're going to want to know a little bit about you. So there's no such thing as a no-doc loan. So let's get that off the table and understand that if you've just gotten out of prison and you were there for bank fraud, you're going to have a hard time borrowing money.
From anybody.
From anybody. But if you're an honest guy and you really have an opportunity, even if you've never done it, I've lent money to bail bondsmen, I've lent money to housewives, I've lent money to people that have never been into business before, but they came to me with a property. It made sense. They had the right amount of money in the bank. They accepted the loan to cost that we told them we were going to give them, and they made the deal work. I have not had a foreclosure ever in my industry.
Wow.
I've never foreclosed on a property. So we've always done a good job with our borrowers. Sometimes we have to say no. Sometimes we tell them to go get a partner. But unlike a bank, we really take a personal interest in the person who's coming to us to borrow the capital.
So the person has to be the right person. And then what about the property? Because one of the advantages to private money is you've got a little more flexibility. And we're talking about a case where you find a property that maybe needs some work and you got to do the work. And most lenders aren't interested in that. Talk about that part of it.
All right. So client finds a property that come to us. Well, we're going to do a couple of things. One, we're going to expect them to have a rehab budget in hand. So we're going to want to know what their scope of work looks like. We're going to have the property appraised with the rehab budget. So the appraiser is going to tell us what the after repair value of the property is.
Yep.
If the spread is greater than the cost of what they're trying to accomplish, so they come to us with a property for $100,000 and the rehab is $20,000 and the after repair value is $180,000, we got a home run on that deal. We're going to lend that investor money and we'll give him as much money as he's qualified to borrow from us. So this process will take 48 hours. The client will know with us exactly where he stands and how quickly we can pull the trigger. The appraisal takes about a week to do and come back, and we go to close. So our goal is to close within 10 days.
Which is crazy fast, right? One of the first things that I learned about you was how quickly you moved on things, and that's astounding. But again, that's one of my favorite things about private money is that you can make quick decisions, and maybe the decision's no. Okay, well, if not, then at least you'll educate the person about, hey, here's what it would have to look like to work. Now, When you're acquiring a property like this and you're moving quickly and it's private money, we've talked a little bit about rates. Talk about the rest of it. What about fees and points, and what generally can a borrower expect?
So the borrower is going to expect to pay a rate dependent on where they are in the risk model that is designed by our industry.
Yep.
So if they're a 650 credit score or higher, they're going to expect the rate to be pretty competitive. If they're done this a number of times, their rate's going to get a little bit cheaper. If they have money in the bank and they're not expecting to be leaning on us over 85%, their rate's going to be a little bit more aggressive. Points are a factor in our business. Expect to pay them. You're always going to pay at least 2 points. Some lenders will charge as many as 4. But the fact is you're getting your money. And I always tell a client, if you can borrow money at 1% a month, it's a home run for you. Don't sweat the small things. Be happy with the fact that you're getting capital. So fees are structured in a way that it helps mitigate the risk for the lender, and the customer only has to worry about the interest rate and how long they're going to have the loan out.
Such a good point. We always say it's compared to what? People say, well, that's expensive. Well, compared to what? Compared to not getting into the property. We also say you can't really make any money on property you don't own. So getting into the property makes sense. But because you are private and you're doing these rehab kind of loans, you might say that, well, long term, that might seem kind of expensive. I'm going to buy this house that needs a lot of work. I've got some rehab budget. I'm going to do the work, but then I want to hang out in the house for a while. You actually help people refinance and do a more permanent loan.
Right. So we carry all of our own acquisition rehab money. That money we have in-house, we manage it, we run it on a monthly basis. But when we go outside that market, now we're going to 30-year mortgages. That becomes a factor that was discussed earlier. Those loans have to be sold.
Right.
So now we have to meet a criteria of what the buyers are buying. So the client is going to have a little bit more effort in the closing of that. But rolling from our loan into a mortgage loan, first of all, we charge no points on the roll. It's a free roll forward, which is a big deal for the client.
Yeah.
The rates are always going to be low, dependent on where we're going to sell them. So the client can expect somewhere between 6% and 7.25%. Pretty much nationwide, which is very competitive for a rental property.
For non-owner occupied, that's great.
And it's 30-year paper. So today we have choices. We have 5-1 arms, 7-1 arms, 30-year fixed. It really becomes a factor more for the client and what they're looking for. This was the maturity in our business. We went from fixed 30-year, no flexibility, have to be in the paper for 7 years, and you're going to pay penalties to get out. Now where you can do a 5-1 arm, you can do a 3-1 arm, you can get out in 30 days, you can get out in 90 days, or there's no penalty at all. So the market's really bent towards the investor's needs, and it's become a much better situation for the 30-year market.
Well, when you say, well, we're gonna use one loan to finance the acquisition and then we're going to refi, the first thing people think is, well, more points. But obviously you eliminated that. I think what's great about this is the initial loan could be used by someone that's looking to buy a property, rehab, and sell it, and then there is no back-end loan. But if somebody wants to buy a property, rehab, and keep it in their portfolio, well, you've got them set up so that they can hold it for up to 30 years.
They can hold it for 30 years. They can build it into a portfolio. And of course, they have conventional choices as well.
Yeah.
Inside Dodd-Frank, they can still qualify for Freddie or Fannie. There's still a 7 to 8 property allowance there. The problem with that is you have to be W-2 income. A lot of our investors today, they're doing this for a living. They're 1099 income guys. They don't have W-2 income anymore.
Well, and just again, no investor left behind. We often talk about being Fannie and Freddie'd out, which is the fact that these types of loans that can be resold inside Dodd-Frank, there's a limit on how many an individual can have.
That's correct. You're limited to less than 10 by both agencies.
Yeah, but not in the case of private money.
Private money, I'll lend a guy. I've got guys that own 40, 50 properties, and they've got mortgages on all of them.
Well, there's a guy that's proven that he knows what he's doing, right?
Absolutely. And there's portfolio loans. We can bundle the loans and make it into a single portfolio loan. And we're doing a deal right now here in Atlanta. Client's got 27 properties. We're refinancing 17 of the 27 into a single portfolio.
Well, that's a great product for anybody who is either Fannie and Freddie'd out or close to it. If you could take, 8 or 10 homes, bundle that together, that would free up some of your availability for the Fannie loans.
Right. A lot of people have made decisions over the years that they were paying cash for properties, which is, in my opinion, a huge mistake. But a lot of them are rectifying it now by refinancing those properties and taking the cash out so they can re-leverage and buy more real estate.
I think as real estate investors, we're often mystified when we learn that the vast majority of houses in the U.S. are owned outright. There are no loans.
Right. Yeah, especially in the investment side.
Right.
On the conventional side, it's not so true, but in the investment side, the majority of homes on rental properties are owned outright and no leverage whatsoever, which boggles my mind to think that they're actually doing that.
Isn't that crazy? When there's so many reasons to we love leverage, right? So many reasons to consider that. And I think one of the reasons, Tony, is because I might find a market and a property that makes total sense to me, but having someone who understands the business, like a private lender, look over my shoulder and vet that deal, that's of a great benefit to me. I would imagine there's times where you say no on a deal that it's probably a deal that shouldn't be done.
Well, what's interesting, because we are real estate investors ourselves, we're one of the few lenders in the country who actually invest in real estate. We never just say no.
Right.
I will always tell a client why I can't do it for them right now. Yeah. So it's never a no. I've had clients come to me and say, look, your credit score is not there. You don't have the right amount of money in the bank to make this deal work. You're struggling in this area. And we try to help them find other investors to team up with. We look for a solution. So we're always solution-based. We're not in the business of saying no. We're in the business of helping people achieve their dream.
Well, and most investors, when they start out, we have a lot of listeners that own the home they live in, but as soon as you go into that world of non-owner occupied, it's just a little different. There's things about it that you have to understand, and once you've done that a couple times, it becomes easier. Same thing when it comes to private money. One of the things you'll love about private money is how quickly it can happen, the flexibility of it, and the fact that you're not dealing with all those levels of bureaucracy. One of the challenges is it has to be a match. You have to find a lender for whom it makes sense. And there are some private money lenders that really are after your failure. They want the property. They would rather see you not make it happen, right? But that's not the kind of thing we're talking about. We're talking about when the lender wants to be on your side. The fact that you've not had a foreclosure, I think, says something about you in that regard.
Well, we're careful, but we're also optimistic.
Yeah.
So we make sure our customer or client understands what we expect of them. We don't allow them to get behind, and we expect them on the rehab side. For instance, we hold rehab money. And they do drawdowns on the rehab money. So we send our inspectors in to inspect the work. The work is getting done, so they're accountable. And as long as they're accountable, about 85% of our clients come back and borrow again. So that's a pretty good ratio number.
Now, in your particular case, and again, we're talking kind of in generic terms about the way private money works, but in your particular case, is it always first position mortgage, no seconds, any of that kind of stuff?
That's correct. We don't allow seconds in our property. We have clients, for instance, we'll do bridge loans. We're doing a big deal right now. Guy bought a property for $1.2 million. He needs another $900,000. So we're going to lend him the $900,000, but we're taking out the first mortgage along with it. So we become the first position. Seconds are a thing of the past. It's more done at a much lower scale than the upper level of lending is done. We don't want any encumbrances to affect us if we ever did have a problem.
Right. Now, Tony, you've just written a book, and I've just received a copy of it. Can't wait to read it. It's called Comprehensive Guide to Private Money Markets, How to Prepare and Borrow from the Private Money Markets. Talk about the book.
Well, the book was, believe it or not, and I explained this a little bit a while ago, this came from you guys.
Right
the
on.
real estate guy said, hey, we want you to have some kind of a position paper. And I said, to heck with that, I'll write a book. The book's been inside of me for a number of years. And what I did was I took the book from an individual coming into the business and going through the entire process. What to expect, what they need to do, and it starts out right away. You gotta, if you're borrowing money, you gotta come forward with the right foot. I mean, I have guys call me all the time, and they start up by trying to tell me how great they are. And really all I want to do is I want the deal, I want to know what your capabilities are, and I want to know how much money you have in the bank. Yeah. That's it. So the book goes into all the steps necessary to borrow money successfully and at the right rate without worrying about the rate. And I spent a lot of time talking in here in the book. Don't worry about the rate you're paying for money. This industry is a high leveraged, high profitable business. We make more money in real estate, and if you want to talk to the President of the United States about that, I'm sure he'll concur. There's nothing that has better return on investment than real estate.
Awesome. Well, I want to bring up the book because when we come back, we're going to play real estate trivia, and someone is going to win a copy. So stay with us. We'll also hear more from Tony about private lending. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
This portion of the Real Estate Guys radio program is brought to you by International Coffee Farms, where you can own a parcel of land in your very own specialty coffee farm in Panama for as little as $15,000. Here's how it works. Deeded half-acre parcels entitled Specialty Coffee Farms in Boquete, Panama are turnkey managed professionally on your behalf by a team of local experts. Sustainable average income is estimated at 12%, and cash flow can begin within 12 to 15 months from the date of your parcel ownership. International Coffee Farms' mission is to own and operate specialty coffee farms that are economically, environmentally, and socially sustainable. As part of this mission, 20% of the gross profits of each farm is committed to a socially sustainable fund to improve the lives of the Panamanian coffee farm workers and their families. International Coffee Farms currently owns and operates 9 specialty coffee farms with half-acre parcels available for immediate ownership. To find out how you can become a coffee farm owner in Boquete, Panama, email coffee@realestateguysradio.com. That's coffee@realestateguysradio.com.
Stop for a moment. Why are you listening to this show? Are you dreaming of a bigger, brighter financial future? More personal freedom to live life on your own terms? What if there was just one skill that could make it happen? There is. Sales. Robert Kiyosaki says every entrepreneur must be good at sales. It's true for investors too. Sales is how you attract money, people, and opportunities. Sales is the skill used to negotiate deals and lead your team. Sales skills are essential to success. The good news is, it's a learnable skill. The great news is, we've created a 2-day interactive workshop to teach those skills to you. Make plans today to attend How to Win Funds and Influence People, Mastering the Art of Financial Selling. For dates and details, send an email to sales@realestateguysradio.com or visit realestateguysradio.com and look under events. Gain the skills you need to succeed. Email sales@realestateguysradio.com or look under the events tab at realestateguysradio.com.
Hi, this is Lawrence Yun, Chief Economist with National Association of Realtors, and you are listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. I'm your host, Robert Helms, talking about financing today and private money. Good stuff from Tony O'Brien. Before we get back to the interview with Tony, it's time to give away his book. It's Real Estate Trivia, your chance to win a prize by knowing today's real estate trivia question. In just a minute, I'm going to give you the question. You're going to come up with the answer and send us your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Include your name, your mailing address, and the answer to the question. And if you're the first person that gets it right, you'll get this great book, Comprehensive Guide to Private Money Markets, How to Prepare and Borrow from the Private Money Markets by Tony O'Brien. Last week on the Real Estate Guys, we asked this: where is the sunniest place on earth? Well, the answer is Yuma, Arizona, where the sun shines through a clear sky for about 90% of the daylight hours in Yuma, and they experience over 4,000 hours of sunshine per year. By the way, the number 2 sunniest place on earth is Phoenix, Arizona. Here's our real estate trivia question for this week. Name the largest U.S. bank by total assets. Yep, the largest U.S. bank by the number of assets it has under management, if you will. That's our trivia question. We're talking about money and private money in this case, but that inside Dodd-Frank money that Tony was talking about, name the largest U.S. bank by total assets. Send us your best guess to trivia@realestateguysradio.com. Include your name, your mailing address, and the answer to the question. That's today's real estate trivia question. A brand new book called Comprehensive Guide to Private Money Markets. Hey, if you weren't the winner, before we're done, we're going to show you how you can pick up a copy of Tony's book, because you're going to want to do that. Bunch of great wisdom in here. You know, Tony, I think many people understand the idea of wanting to borrow, and it makes sense, and leverage and all that, but they may be intimidated by the process. And if someone hasn't done a private money loan before, there's always that first learning curve. So if I've applied for a loan for, say, the home I live in, I mean, that mortgage application is gigantic, and there's all the substantiating documentation and so forth. Let's just talk quickly about what kind of documentation is required on the borrower and on the house.
So the documentation is minimal if you want to compare it to the Dodd-Frank marketplace. And everything's done by telephone. and fax or email. So it becomes a very simple process in order to borrow money. But you're going to expect to have a couple of things. There's a simple application that you're always going to fill out. Any lender is going to require, who are we talking to? They're going to ask you some specific questions about yourself. They're going to want to know about your current employment, if you have any. What do you have in the bank? So we usually require a couple months of bank statements.
Okay.
We don't require tax returns. We don't require a letter from their employer. All we're interested in, do you have money in the bank? If we're going to lend you 80% on the property, do you have the 20%? And do you have the money to start your rehab? Because when we do a rehab loan, and we'll lend 100% on the rehab. So if you got $30,000 of rehab, we'll give you $30,000. But you're going to start your rehab with your own money.
You're going to advance it, and you're going to get reimbursed.
That's correct. So
Yep.
you're going to get the pull. You're going to do your pulls, and we're going to send our inspector in. They're going to confirm the work's done, and we're going to wire the funds to your account. So it's not obtrusive in a way of doing business, but it is accountable. Because our business is all about accountability. We don't want the same problems that we had back in 08 and 09, and this is one of the ways that we do it. But when it comes to conventional lending, it's a far different process.
Yeah, most definitely. So that's one of the things is don't be dissuaded if you've been through one of those difficult loans where you feel like the underwriter is spending more time on your personal file than need be, and that they're looking at every single thing you've ever done. This is simpler than that. But the basic premise is if the deal makes sense, you'll be able to get a loan for it. Now, Tony, a few weeks ago, we were talking about the role that a real estate investor can play in healing when there's a disaster. We've just been through the terrible floods and all of that, and yet that is likely to create some opportunity. And I'm just thinking that this type of a loan product might make sense for someone looking to take advantage of maybe a situation where a traditional lender would have no interest at all. Can you speak to that part of it?
Sure. So we've just had a hurricane in Houston, just had a hurricane through the state of Florida. Those are investment opportunities for people that have a vision of picking up issues. There are going to be a lot of people who have no flood insurance. Their choice is going to be to abandon the property or to find a buyer for that property, which will help them maintain their credit rating and allow them to get into a property later on.
Yep.
So those opportunities are there. If you're a real estate investor, you ought to be looking in Florida and you ought to be looking in Houston because there's going to be a lot of buying opportunity. We're stationed in both markets to start lending very heavily. We believe that is going to be true. We're looking at properties every day in Florida, starting since yesterday, as a matter of fact. Houston, the same thing. I've got people down there walking markets and seeing what markets may be available. So we're not afraid of damage like this. Because a house is a house and repair is repair. If you can buy it right and the rehab is the right number and the value behind it is what it is, there's no reason to say no.
You know, back in 2008, 2009, we saw people walking away from houses, and we developed this concept of a lot of folks that we saw out there healing America one home at a time, right? When that blighted house gets repaired, it helps everybody. It's better for the street, it's better for the community, obviously better for the owner, better for the lender. It's the same thing here. I mean, I think individual investors can do some real good, and we talked about that on the show. But what that brought up for me is also just asking you, how wide of an area? My experience is that most private lenders operate in a very small geographic area. They like to be close to the properties and so forth. How wide of an area do you guys lend in?
We cover 38 states. So if you take the state of Florida to New York and then go all the way west to the Mississippi, that's our primary market. Although we've done some business in further western states, those are our markets. I can tell you honestly, I've never seen a property I've lent on in the history of our business. Wow. I've never seen one. I've seen pictures.
Right.
But I've never seen a property that we've lent money on.
Wow.
So I rely on professionals to give me their opinions. We count on them 100%. And I can tell you, I've never met a borrower.
Wow.
I've never physically met a borrower who's come to us and borrowed money. So, I mean, 38 states is a lot of market. I don't expect to meet them. I get a lot of Christmas cards, get a lot of bottles of wine, but I've never met anybody or I've never seen a property I've lent on.
Wow. Well, that is certainly a different answer than most people would give. And speaking of different, I want to ask you about this new concept you have. I've never heard of anyone doing anything like this, but it's just hot off the presses, if you will. Tell us about the Money Club.
The Money Club. That's our new baby. So we've come to a conclusion that investors are a breed unto itself.
Yes.
And if you're an investor, you need to belong to something that provides an issue or a benefit just for yourself.
Yeah.
So we concepted the idea of creating a money club, a club that an investor knows that they're going to get money instantaneously, because one of our goals, when we first got into business, we lent money. It took us 30 days to get money out. Then it took 21 days to get money out. Well, now we're down to 10 days or less. So I have clients that bring us a property, and a week later we're funding it. So the whole idea has been to create an organization where someone can come into a club, we pre-underwrite them, we get them cleared, we tell them how much money we're going to give them, we give them a pre-condition letter so they can take it to the seller and show that they've got money available. And we do all this in the aspect of having within a club. So they get everything from no underwriting fees to no points rolling from the acquisition rehab money to the mortgage. We help them value. We have a service that we've put together where if they're going to buy the property and they're going to rent it, we run a whole program with another company that we've affiliated ourselves with, where we'll give them the whole market condition of the house where the house is located. So it tells them what the average markets are worth for rental properties. It gives them comps in the market. It tells them what the value of the house is based on its size. So all these services are free to the members of the Money Club. On top of that, being associated with Freddie and Fannie, we get 9,000 real estate properties that have been foreclosed on every week.
Wow.
My team breaks those houses down by state, and the Money Club members get the markets that they live in. Every week they get 100, 150 houses that have been foreclosed on. They're already priced by the bank, so they don't have to do a lot of negotiation. It's a yes or no question, and we'll lend them the money to buy the house, and we'll lend them the money to rehab the house. So it's a collective organization that is designed to put everybody together so that there's one-stop shop from start to finish.
Well, this takes advantage of a couple of unique things with the change of the market, but the fact that these are the very properties that you'll loan on is great, and then that gives them the opportunity to find out, does it make sense? In the past, that's been very much just you either had to know somebody to get on that list or you had to negotiate, but bring us up to speed with what's happened to get the efficiency since kind of the mortgage meltdown, where this stuff is already kind of pre-negotiated, the pricing and all that.
Well, the banks have gotten smart. So they understand value. So what they do now is they don't just have a mortgage value. In other words, there's a certain dollar amount owed on that house, so they'll let the house go for that price.
Right.
What they also do is they also know what the markets are doing. So they've learned to take a spread between what's owed on the property and what the property is worth. But the bank can't make a profit on the house.
Right.
They have to sell it for no more than what's owed on it. So what they've done is they pushed the property values closer to their mortgage values, which is understandable in this marketplace that we're in right now.
Yep.
But at the same time, they still have several 100,000 properties that are foreclosed on. The foreclosure process still continues to this day,
right,
even though the market's in a much more stable position. But the banks understand that they got to get rid of these properties quicker than sitting on them. And that's why this opportunity has been made available.
So I think as someone who's part of the Money Club, if this is a way you're looking to find inventory, that's obviously great. Every week properties come in. From your point of view as the lender, what do you have to know about these properties? Anything different than any other property I might find and call you about?
Well, they're typically underpriced because the bank is only looking to collect the money that's owed on it. So we know that every deal that we've done in this organization that our clients have made very good money on. I buy a lot of properties myself, and we've done very well on those. We restrict the client from getting too far outside of their box. So we have clients that say, yeah, send me Texas and Georgia, North and South Carolina. Well, nobody can look at 400 properties
right,
in a matter of a week.
Right.
So because come Monday, when these properties have been dispersed, Wednesday, Thursday, they start selling off. And a whole new list. So you got a time frame here that you have to stay within a time frame. But if you can look at 100 properties a week and find 3 that work, you're going to run out of money before you run out of houses.
Right. Now, if I find a property like that, if I find a property in the list, what is typically the terms? How quickly do I need to be able to close on it? Because that's going to tie into the loan and everything else.
Well, the properties are already pre-priced. So if the client comes to us and says, we want that house and we'll pay that price, we contact the bank and say we're taking the house. We have a closing speed based on the bank's requirement, because one of the propositions that the bank has is that they have to have an absolutely pristine title.
Right.
No liens, no encumbrances, no taxes. So the bank is going to take some time to do that, and it takes about a month. So in the process of the month, we've already underwritten the loan. We already know all about the loan. The client has done what they have to do on the due diligence side for the property. And by the time it's time to close the property, funding is in place. We just did it. We just closed the property in 11 days in North Carolina, Charlotte, North Carolina. Still haven't met the client. He lives in Charlotte, North Carolina. And I haven't seen the property, and it's in Charlotte, North Carolina. As you know, I live in Charlotte, North Carolina.
So you have no excuse.
So we have no excuse. But
Other than we just don't need to do that.
We don't need to do that. That's correct. But so we closed the property in 11 days. And it took 11 days because the bank needed an extra 3 days to get the title work over. So we can close it as quickly as the bank will allow us to close it.
Let's talk about types of properties. You lost single-family homes, but also other properties, duplexes, fourplexes. What's kind of your sweet spot for types of properties you like?
We'll go in-house. We'll go as big as 10 unit. So 10 doors, we'll go up to 10 doors. And then we have outside funds that we have access to that we can do small commercial, mixed use, probably anything under $5 million is our bailiwick. We don't get outside of that. It gets to be a point. When you start getting into bigger deals, you start getting into more information needed. A simple appraisal on a 10-unit building could run $2,000 or $3,000.
Right.
So we try to counsel our clients to make sure, you've been doing single-family home now for a couple of years, and you want to buy a 5-unit. That's a big jump.
Yeah.
Right. Duplexes, quads, triples, those that's bread and butter.
The book is called Comprehensive Guide to Private Money Markets, and if you'd like to find out how you can get a copy of the book and all about the Money Club, all you have to do is send an email to moneyclub@realestateguysradio.com. Anthony will be able to get you all the information that way, moneyclub@realestateguysradio.com. A lot of folks have preconceived ideas about private money and what we call hard money and so forth, but in your years of experience now, you've been on lots of different sides of the financial equation. What are some things you think investors need to know about opportunities when it comes to financing real estate?
First of all, it's available, and there's no limit to how much is available. And it's available to the people who take the effort to do the right steps in order to get into the money. So that's the first thing that they have to understand. Money's not free. Everyone has to make a profit. We're not borrowing from the government, so we can't charge interest rates of 3 or 4%. Our rates are going to be higher.
Yep.
Usually, I would say 10 to 11% is pretty standard.
Okay.
There's always going to be points involved because that's part of the mitigation of our risk, and that's why we charge points.
Yep.
The paperwork is much minimal compared to what they would have experienced before. But the key is that if they have the right deal and they got a decent credit score, they're going to get their money. And that's what they should really be focused on. Can they be financed? And in today's climate, the answer is yes, about 85 to 90% of the time.
We often say that you only negotiate for the price of the property once, but you can negotiate for the terms on the loan many times. When it makes sense to refinance, you can help them with that part of it. But in the meantime, hard to buy properties just became a lot easier to buy. Tony, great stuff. Appreciate your wisdom, and thanks for your time today.
I had a great time. Thanks for inviting me.
There's Tony O'Brien. If you want to find out more details about the Money Club and just what his company can do for you, just send an email to moneyclub@realestateguysradio.com, and we'll get you out information. Plus, you'll be able to find out how to pick up a copy of this book, Comprehensive Guide to Private Money Markets. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from November 10th to the 13th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 10 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful. The people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. 2016 was the biggest year in tourism Belize has ever witnessed, and this year is looking even better. How does that translate to real estate investment? Well, that's what you have to come see. There are all types of opportunities in Belize when it comes to real estate investing, including both long-term and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law, property rights are strong, and contracts are written in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me November 10th through 13th in Ambergris Caye, Belize as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet local providers that will help educate you about the market so you can follow up with them after the trip if the market is interesting to you. That ball is always in your court. You'll receive their contact details, but they won't receive yours unless you give it to them. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, these trips are small and we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on events where you'll find the Belize Discovery Trips. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, November 10th through 13th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under events. I look forward to seeing you in beautiful Belize.
Hi, this is Mark Skousen, and you're listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, come hang out with the Real Estate Guys. Go to our website at realestateguysradio.com and click on events. You'll see all the fabulous fun places we're going, like New Orleans. We're going to the New Orleans Investment Conference. You should come with us. We're going to have a great time, learn a ton, and we're throwing a party. That's going to be a hootenanny.
We are throwing a party. It's going to be great. You know, we go to conferences all the time. And of course, when we go to conferences that we're producing, we're running around like chickens with our head chopped off, right? I mean, we got our hair's on fire and we're busy making sure all the logistics are going on. So when we get a chance to go to somebody else's conference and it's all their headache, you know, we said, well, let's party a little bit. So we're going to host a hospitality suite in New Orleans on October 27th in the evening. And so if you come to the conference, which you can find out all about on our website under our events tab, and buy your tickets. It's not from us. It's from Brian London and his group at Jefferson Companies, and go to the New Orleans Investment Conference. Send us an email to New Orleans Party at realestateguysradio.com, and you can come to the party and hang out with us. Of course, we can't guarantee that everybody, so act quickly, right? If you're going to come, book your ticket, send the email to New Orleans Party at realestateguysradio.com, and then assuming that we still have room, you will be invited to come hang out with the Real Estate Guys and some of our friends. We've got a couple of the VIP speakers already confirmed, so there's not quite a guarantee because anything can happen, but there's a high probability you're going to get a chance to chit-chat with some pretty famous, big-brained people who can talk to you all about what's going on in the world of economics and money and gold and real estate and all that fun stuff.
Good stuff. Hey, speaking of big brain people, how about that Tony O'Brien?
Yeah, it's great. You know, he's really helping to unravel the mystery of money. And I think that's important because so many people think there's only one on-ramp, there's only one approach. You know, you go down to your local mortgage broker like I used to be, and I've got a whole portfolio of stuff I can do, but it's all within one category of lending.
Yeah.
And there's this whole other category of lending that is very, very different, and it's very hard to go to regular lending sources and get properties that are distressed taken care of. And yet what this market needs right now still, I mean, one of the things he talked about is here we are all these years past the financial crisis, and we, like a big python that ate a big pig, you know, months, years later, is still working on the digestion. We're still digesting the fallout of the 2008 financial crisis. That's still going on. And the key is getting the money to market. And so having people like Tony who are in the food chain of distributing the money and getting it in the hands of people like you, the listeners that are out there that want to do this kind of work, there's a huge opportunity to do value add real estate, what we call forcing the equity. And to his point, yes, you know, you pay a little bit more than you would conventional money, but it's not a long-term commitment. You're just paying a little bit higher price in terms of points and fees and interest rates and all that in order to be able to have access to working capital, which if the property is right and the deal is right, you should be able to make way more. I don't care what the interest rate annualized is.
Right.
If I have a loan for 6 months and it costs me a point a month or whatever the number is, then to me, it costs me 6%. That's all it costs me. And if the deal is going to make me 30 or 40 or 50, what is 6? I mean, how much 6% money do you want to borrow if you can make 20 or 30 or 40% with the money?
Yeah, all of it.
All of it,
right,
exactly.
People get caught up in this all the time. I go, I would never pay 14%. Really? What if you could buy a property that made 20? Well, then you ought to borrow at 16, right? It's just math. And yet we're used to whatever we're used to. If we bought a house and our interest rate is 4.5, oh, well, that's because this machine that creates that kind of money is funded by people who have a very different agenda than private lenders. What's great about private lenders is you're going to know right away. You're not going to get this whole loan committee thing. You're not going to have all that waiting and wondering. And face it, in a competitive real estate market, anytime, speed matters. When you can do it quickly, what does a seller want to hear? I can close in 4 months, or I can close in 10 days.
Well, think about it. If you have, say, a 60 or 90-day rehab project, and the difference between getting funded in 30 days or 10, how many days, percentage-wise, are those 20 days from the time you can actually get going until you can exit your property? Because there's things that you can be doing, lining things up, while you're waiting for the money to come through. So if you've got a high probability, and one of the things that I liked about Tony's a no-nonsense guy. You can hear a little bit of that New Yorker in him, right? Yeah. Even though he's living in Charlotte, we talked a little bit off mic and we know his background. And it's really, I wish we had time to talk about his background because it's amazing. He really understands the money game, top to bottom. Operating at the street level as an investor himself, dealing with people at the retail level that are actually buying properties and making loans, all the way up to the hedge fund level. And
and the whole back end of packaging and all that crazy stuff.
All of that stuff, really understanding that. And the other thing that I really thought was great is that he's looking for a reason to say yes, not a reason to say no. He's never had to do a foreclosure, so that whole loan shark thing goes out of the picture. And the other part is that, when the no comes, it's not no, it's not yet, which means I'm going to coach you up a little bit because I see you as a human being. I see you as somebody who has desire. I see you as a potential source of multiple deals down the road. If I can help you a little bit, get prepared. One of the things that I used to love to do when I was in the mortgage business is teach people how to use mortgages strategically, how to understand. The very first white paper I ever wrote before I was a co-host of the radio show, and it was like, okay, you're going to speak at a seminar, you're going to talk about lending. My very first white paper was understanding the importance of pre-qualification and what pre-qualification was and the difference between being pre-qualified and being pre-approved. And so just understanding what people needed to know if they're going to get into a transaction, how to make sure they had their money lined up and how to prepare themselves to be a good borrower. If you can become a great borrower, you've got lots of people out there who want to offer you money. Because just like you're out there as a real estate investor looking for properties to flip, these guys are originating paper and they're looking for borrowers to flip,
right,
if you will. Except the thing is, with a property, it's one and done. And when you're working with a borrower, you can keep working with the same borrower over and over and over and over again and keep creating more and more and more paper because you're making the loan, you're making your fees, you're making your profit on the paper, then you flip the paper, and the borrower's like, hey, I made money on the property. You're like, great, I made money on the loan.
Let's do it
Let's
again.
go do that again. It's a partnership.
All right, good stuff. Well, obviously, you need money to buy real estate. There's lots of places to get money. Hopefully today we've opened your mind to the world of private money. Big thanks to Tony for taking time out of his busy schedule to be on the show today and for writing this book. Talk about a guy that takes action. That's pretty impressive. It's called The Comprehensive Guide to Private Money Markets. Again, if you want to learn how you can purchase a copy of the book or just find out about the Money Club, send an email to moneyclub@realestateguysradio.com. Next week, another great show. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.